All right. Welcome, everyone. Welcome. So let's get right into it. As you guys can see on the chat, we have two objectives today. Number one, talk about what Jerome Powell said and what the Fed's interest rate decision is and what it means. And then number two, we'll talk about some TA for SPY. We'll do some technical analysis for SPY and what I expect us to do for the rest of this week as OPEX is on Friday as well. Excuse me. Now, if you guys don't know what OPEX is, it's when multiple option contracts, all right, expire at the same time at the end of the day on Friday, okay? And usually during OPEX, we have a lot of volatility and usually it causes a sell-off, right? It makes sense, right? Multiple contracts, hundreds of thousands of contracts are getting closed and being sold at the same time. So that's obviously going to push the price lower. So OPEX is going to cause a lot of volatility and more room to the downside. Okay, so let's go ahead and take a look at the first objective, talking about what Jerome Powell said and what the Fed's interest rate decision is and what it means. So today we got our 75 BP basis point raise on the interest rates. Now, what does that mean? Okay, the first thing that popped into my head is that, wow, the Federal Reserve is actually doing something and they're being serious, or they're being actually serious about inflation, and they're taking responsibility that they've caused inflation by letting it become a runaway inflation because they kept on telling us that it's only going to be transitory, right? And they kept on focusing on the overall macroeconomics, and only focused on the labor market, right? The health of the labor market. Because that's the backbone of the economy as we're coming out of COVID. But with this increase rate, with this increase and this hike, it just tells us that they're taking responsibility first of all, and they're doing whatever they can now. Really, literally, they're officially saying, okay, we'll do whatever we can. Jerome Powell even said it during the conference that they'll use any means that they have to make sure that they bring down inflation and bring price stability to all commodity prices, even help with the supply and demand issues that we're currently seeing, and a multitude of other highly increased prices that we're currently seeing right now in the markets. So this is very, very good in the long term, but very, very bad for the equity market, right? Because obviously, interest rates going up, that's not good for equities. And even with the housing market, right, the mortgages, right, mortgage rates, we're seeing literally the lowest demand and lowest opening of mortgages, right? And that also means that there's less demand for people to buy houses, okay? And so if there's less demand for people trying to buy houses, we're gonna have an empty amount of buyers, right? And sellers are gonna be left to dry, right? Sellers are just sitting there with empty houses that they need to sell. And so what are they gonna do? They're gonna lower down the price, right? And that means all across the board, right? Obviously, initially it's gonna start locally, that houses are gonna start going down in value. And eventually the entire nation of the United States are going to see a broad decrease in housing prices, which is essentially what we need. We need right now, right? It's a dire need to lower down and decrease the housing prices. And I don't think there's going to be a housing crash, to be honest. We're just going to see a slow decrease in price as the supply and demand type of economics start to really show itself in the housing market itself. So people who are saying that we're going to see another 2008 housing crash, I don't think so. I don't think that's happening. I think the Federal Reserve is going to controllably increase the interest rates, right? They're going to continuously monitor the economic data that continuously comes out, especially the CPI data for each month and other economic data, right? So they're gonna continue to monitor that, and hopefully we can see some inflation, higher prices going down sometime in the summer, because last year we had a period where inflation kind of went back down, right? And the Fed thought that that might have been the peak, right? But oh, how much they were wrong, right? Because at that point they thought inflation was was just transitioning into a lower number, right? Lower than 2%, right? Which is 2% was their target. So with transitory inflation, right, thrown out the window by now, we're going to continue to see entrenched inflation. Jerome Powell himself said that most likely we're going to see inflation above their 2% target into 2024. That's 2 years down the line from now, right? So we're going to continuously see high prices for 2 years. And what does that mean for us? Well, we need to continuously save and save and save with cash, right? You guys better have a savings account or a 401k or a Roth IRA and putting in cash, right? And slowly build up investment positions in the equity market, as a lot of good names, good growth leaders, and solid companies are now very cheap. So starting to kind of dip in your toes a little bit into each of those individual names. And start building a position into 2023 and all throughout 2023 and into 2024, where we hope inflation will be down to around 3% to 2%, right? I think maybe in the next FOMC meeting, depending on what the CPI data is, I think they're going to stay and stick with the 75 BP, right? They're not going to change anything. They're going to stick with the 75 BP. And I think once summer ends, there might be another pop in inflation. Hopefully, I'm just being pessimistic here, but hopefully we don't see that, because who likes high prices? So in the next FOMC meeting, I expect them to at least stay at 75 BP, and after that, and after the summer season ends, I expect them to start looking at 1 whole percentage point. Okay, so that's going to be a big move there. 1 whole percentage point. And today, I think Jerome Powell was already hinting at the talks of a possibility that they can increase to 1 percentage point. And I've been telling my CFO Swing Watch members that there's a possibility that we'll see a range between 75 BP to 1 whole percentage point, right? So 0.75 to 1 BP. And we got that 75 today. So, the next thing I think is just going to be 75 again. They're going to keep it the same, depending on how the CPI data is for this month, right? The month of June, since we just saw the month of May last week. But yeah, that's kind of the answer for number 1. We completed objective number 1. Now, let's talk about some TA for SPY, objective number 2. So SPY here is, very volatile today, right? And when the Fed's decision came out to be 75 BP, right? They're going to increase the interest rates from 25 to 75, right? I told my members to wait for the secondary reaction, because the first reaction was a big pop, right? We were already seeing right here on this 15-minute candlestick on SPY, we started to bounce. And then on the next one, when the decision came out, we started to really move up higher and higher and higher. And then the secondary movement came and we crashed down, right? And we're making a descending channel, right? And it looked like we're about to continue lower until Jerome Powell started to speak at 11:30, which is this candlestick. And I think what Jerome Powell said really eased the fears of a recession incoming, right? What he was saying was kind of, it almost sounded like as if he wanted to make sure that the blow of their decision today, they made the decision yesterday. They were doing the meeting yesterday and they announced it today, but it kind of sounded like as if he was trying to make sure that the blow wasn't too hard on the equity markets, as if he was adhering to some people. I don't know who, but he looked very stressed today as well, as if the conversation that they were having with all the board members yesterday was very stressful for him. So who knows? But he looked very, very stressed. But I think he did a pretty good job today explaining why they increased the rates to 75 and gave us a clear conviction path. Finally, at least they're not beating around the bush anymore. They're actually getting serious that Jerome Powell and the rest of the board members will be looking to fight inflation until it comes back down to 2%. Right, that's their main goal, and it will be for the next 2 years. So I think the markets liked what he was saying because of the fact that he has conviction now, instead of beating around the bush and saying that, inflation is still, we still don't know what the numbers will be. It might come back down. It might be slightly up again and stuff like that. And, he was saying stuff like, we're kind of focusing on the labor market still, trying to keep a healthy, strong labor market so that the US economy doesn't crash, and et cetera, et cetera, et cetera. And that's kind of what he was saying in the last two FOMC meetings, which I didn't like because he was beating on the bush, right? He should have, outright just said that they are going to start taking responsibility and looking to, keep inflation back down to that 2% target. So now, one thing that I found interesting what Jerome Powell was saying, all right, and I think the reason why the market reacted pretty well today as well to this specific statement was that he said that the Fed is not going to induce a recession. He said that, right? So I don't know if he's, I don't know if he was stressed about saying that, but when a reporter asked him if there's a chance that we can see a Fed-induced recession, and specifically for me, I'm looking for stagflation, okay, where we have high employment rate, or on the opposite, low unemployment rate, and we have high prices at the same time. That's what stagflation is, right? We have no growth at all in the economy. Everything's stagnant. But anyways, I was kind of surprised that he blatantly just said that the Federal Reserve is not looking to induce a recession, and he doesn't think that there could be a recession because he thinks that the U.S. economy is strong, right? It's robust enough to be able to handle all the macroeconomic pressures that we're currently seeing and all the supply and demand fluctuations that we're seeing as well, which I think, personally for me, I think that's kind of crazy. Recession might be necessary here. And what they're doing right now to really reduce inflation is, in the future, I think it's going to create an actual recession, right? I think the cause of a recession is going to come from them, right? So I don't know if they're trying to distance themselves from a potential recession, right? Because remember, in the past two meetings, Jerome Powell was being very aloof, right? He was saying, we'll just let the market do its thing. So I don't know if he's using that same sentiment and same perspective on a possible Fed-induced recession, saying that, okay, we don't want to take responsibility of a Fed-induced recession, but when a recession comes, we don't want people pointing the fingers at us. Does that make sense? Right? So I don't know if they're trying to use that same tactic as they did with inflation, because it did not go well. Because today I finally heard with his own mouth, right, that they are responsible for fighting inflation, right? So I think they need to come to realize that a recession has to come at this point. I'm not trying to be too pessimistic. I think there was even a I think it wasn't a I don't think it was a poll, but there's something that tracks recession, and I think that number said there's now an increase. Well, that number increased, that value increased to I think like 72 or 75% of a possibility of a recession, right? So, I'm not going to rely on that, but just on a macro perspective, we need a complete reset, right? And also, if you go on the daily time frame for SPY, right, most names are down 70 to 80% or 80% plus, and SPY is not even down that much, right? We just finished around 20% from all-time highs. Okay, while other big tech growth stocks names and all the major solid names are down 70 to 80%. So I'm not saying SPY has to go down that much, but SPY needs to follow those movements because we're not even near the low of 2021, not even close yet, right? So I personally think that we have a lot more movement to the downside for SPY. So don't get excited that we just started we had a nice big reaction to the upside today because just for now, technically, we have a gap to fill. That's it. Like that's it, right? We just have a gap to fill, and we're most likely going to fill it. We attempted to peak above the gap, which is good because that's telling us that, hey, the price wants to go above and break above and stay above potentially to start filling in this gap. And I told my CFO Stream Watch members that on Sunday, if we do not fill in the gap anytime on Monday or even Tuesday, sometime this week, we're going to start seeing a filling in the gap. And today we got that thanks to the FOMC conference and the decision. But hopefully tomorrow we can see another continuation to the upside because I want to see this gap filled. Because if you don't have this gap filled, we cannot go downward any longer. We need to fill in this gap and then head lower, right? Remember, long term, I am looking for more downside. And if you guys haven't seen my video, right, where I give you guys 4 reasons why the market can be crashing, right? And we're crashing now. We're in bear market territory. Go ahead and take a look at that video because I have some very, very important things to say, right? So with SPY, I expect at least a retest of today's highs that were made, and the high today was 383.90, and hopefully we can retest 385, which is a previous level of support, which is now a new level of resistance, right? So I expect us to hit 385, reject off of it, and hopefully we don't retrace all those gains that we can possibly get while we're heading up to 385. Because we need to fill in the gap until we hit 389.75. But now, here's the thing. If I'm expecting us to move upwards and close this gap, I don't think we have enough time because on Friday, we have OPEX. And if you guys were here when I just started the live, I explained to you guys what OPEX was, but OPEX will definitely cause a downtrend, right? Near the end of Friday, right? With all those option contracts expiring at the same time. So on Friday, I think we see red, okay? Tomorrow we can see green. Let me actually take a look at futures right now. Yeah, so nice big pop at open, a little tiny gap up, and we moved up a little bit here on futures. Hopefully we can see overnight a nice big pop over the highs that were made on futures, but we couldn't hold 3825 now, so maybe we kind of go down and then go back up again near pre-market before the market open, right? So hopefully SPY stays, SPY futures stays up around here so that we can actually open up with a little tiny gap up and continue to the upside and possibly hit 385 tomorrow. All right, so 385 is my ultimate target this week so that we can start filling the gap next week. All right, because definitely on Friday, we're going to see a lot of volatility, but not Not like this volatility though. Right, this is crazy volatility. Just little bit amounts of volatility, and I think we can see some type of volatility, but mostly to the downside. So remember that, guys. We have OPEX on Friday. So Friday I expect red. Okay, so that's kind of it for SPY TA. That's objective number 2 completed. I just want to go over the trade that we did today to the downside. So in the morning, I sold my contracts, my SPY swing contracts. Okay, right here on this candlestick, and then right here as well. Okay, and I think I sold them for what? What was my percentages here? 113.75% and 98.11%. And then I told my CFO Swing Watch members, we look a little bit extended here, and there's a possibility that we can fill in the gap here, this gap up that we made, and we need to. We need to fill in the gap, okay? Because if we don't, then we're gonna have a gap up, 1 gap up, and 2 gap downs that we both need to fill, right? So there's 3 gaps that we will need to fill, and I don't want that, right? So I want to see a gap fill, which we did thanks to FOMC today. So phew, thank God. we would have had 3 gaps to fill if we didn't have the violent reaction to FOMC. But now we're just back to those 2 gap downs that we need to fill in order to continue to go lower. But I told my CFO Swing Watch members that I'm looking at this level here, 378, right? And I told them that on the next candlestick, right, if we break below this low of the candlestick on this specific one right here, right, okay, which is 378.29, the entry will be below this number, and I said 378.20, right? And we started to break below 378.20, and we got in, and I got in, right? And hopefully people got in, but I know 1 or 2 of you guys got in. So we got in, and then it started to become very, very volatile, right? As we were looking at the price, right? But we still held because, well, it didn't hit my stop loss yet, right? My personal stop loss. So and the next candlestick comes, and then we plunge lower, right? We cannot hold this 378 intraday support level, and we start coming back down. And I said the profit target was 377, but here's how you guys do risk management, proper risk management. Because of the fact that I did not like the micro volatility after we broke below 378 on this candlestick, I said, okay, look guys, I'm going to take profit at 377.50. I don't care if we come back down and we go lower and hit that 377. I'm going to take profits at 377.50 just because I did not like how the price was acting on the previous candlestick. You guys had to have conviction like that, right? If you don't, then you can't make split-second decisions when the market is going to go without you, right? Or the market is going to leave you in the dust. So I told myself, I don't care. I'm going to take profits at 377.50, and I got out with a really good percentage, 12.05%. That's really good, right? So anything above 10% is amazing, guys. And like I said, if you guys take a look at my Instagram story, or if you guys have already taken a look in my Instagram story, I tell you guys why percentages are so important to be comfortable with, right? And for you guys to be using percentages only, not the actual P&L number, right? There's a big reason why, and if you guys don't know why, go take a look at my Instagram story after the live. Okay, it's very important. But like I said, guys, this is how you do proper risk management with conviction, right? I told myself I don't care if the price goes back down to 377. All right, I can be a little bit flexible with my profit target, but I can't be flexible with my, especially on day trading. Personally, for me, I'm going to keep my entry and my stop loss strict, right? Because I'm not a day trader, obviously, and so I told myself I'm going to move the profit target to be a little bit away from the initial one, so about 50 cents away from the initial profit target, and get out around 377.50. All right, so you know, if you guys think, why did you do that, Andrew, right? Well, because, like I said, I did not like how it was acting on the previous candlestick. That's all, right? And you need to have conviction like that, because that might become really beneficial into your future trades. And the only thing that mattered was that I had conviction and I had a game plan that I still followed with discipline. Does that make sense, everyone? All right. So that's the put scalp that we played today. Okay, and then I also made a very, very nice technical analysis prediction here, where I said we'll be making a lower high after a retest of 378, which we did right here. And after that, I said if we make a lower high here, we're gonna start forming a descending channel. And guess what? We started doing that, right? So obviously today we broke out of it and we closed above 379, right, which is pretty good. Nice bullish close. So I told my CFS Pretty Much members that if we end up bullish, then we will get a nice bullish day tomorrow. And it seems like futures is already showing that as well. Okay, so let's take a look at your questions, guys. Nilesh, what up, mate? Again, what's up? What's up? Joel, you said, hey Andrew, can you go over the DAL swing? If not, I'll just ask some questions later. Of course. Of course. Let me look at, yeah, let's use that. Get our say out. DAL. So, this is a swing that I am looking at. I signaled it in the chat room. If you guys are not in the chat room, I can't share it with you guys because that would be not fair. It won't be fair to all the people who are subscribers. So if you guys want to know what it is, you guys have to subscribe. But why am I wanting to swing this name? Well, Joel, first off, all the airlines have been completely obliterated, right? All the gains that they've made so far back in 2021, we're coming right back down to the previous lows in 2020. So this is not good, obviously. So we're looking at Delta. Let's look at American Airlines, right? Even United Airlines, even JetBlue, right? JBLU, okay? Even LUV, right? Southwest Airlines. All of them are dead, right? However, all of them, what I figured out today when I looked at all these names, they're sitting at areas of support, right? And we can see a potential double bottom bounce on all of them, right? Literally all of them. So, we have a pretty good area of support here around $31, excuse me. And we bounced off of it yesterday and we stayed above it today. And I expect us to see a nice quick reversal. So Joel, I'm looking for like a overnight swing, just like we did with my spike calls from Monday to Tuesday. From Tuesday to today. So, for Delta, I would say wait until we get a break above 33, but that's a little too late. So if you want an earlier and riskier entry, let's go to the 15-minute time frame to get more information. I would say get in at the break of 32.50, right? But if you want to even get an even more riskier entry, here we go. So we're seeing a wedge here, okay? So this is a intraday 15-minute wedge chart pattern. If you want to get in at a riskier entry, get in at 32.10 or even 32.20. Okay, Joe? So for those contracts that I gave you guys in the CFO Pro Traders channel, get in at these entries, all right? And have a very tight stop loss of at least $1 or even 50 cents from the area of entry point. But like I said, if you want to get confirmation, look to get in at the break of 32.50. All right. Oh God, we have some bots in the chat. Oh no. I'm gonna have to take them out. Ban, ban, ban. Are you guys able to ban it on your side, guys? I don't know. Report. If you guys can report it as well on your side, report it for me, please. Man, every single social media platform has been seeing a surge in bots. I don't know what's going on. Anyways, I'm reporting it. Jeez. Yeah, Joel, spam. Anyways, Joel, did you understand that? And the reason why I'm looking at that, right? I just want to see a simple movement higher, okay? Nice little reversal, kind of an oversold bounce, just like, what do you call it? Just like SPY that we saw from Tuesday to Wednesday today. Okay. Oh my God, it's still coming in. Okay, I have deleted them. Okay, my God, I wonder what that was. All right, so that's kind of it for tonight, guys. We completed objective 1 and objective 2, and you know, I don't want any more bots to come in and more spamming bots to come in as well. So that's it for tonight. That's kind of what I see for the foreseeable future. I expect us to stay on the next FOMC meeting and FOMC decision to stay at that 75 BP, because I think inflation is going to come back down a little bit in the summer. I think Jerome Powell mentioned that as well. I think he's expecting that as well, hopefully, because, well, we've increased interest rates to 75 BP. That's huge, right? We haven't had an increased rate that big, that big of a jump as well since 1994, right? Since 1994. So that should do a number on inflation for short term. So possibly in the next few, maybe 3 to 4 months, we might see inflation numbers go down, which would mean in the next FOMC meetings, we're going to see the same 75 BP. Okay? So 75 BP for interest rates. That's what I'm expecting. Okay, but remember, it all depends on all the CPI data that we get for every single month. Right? I'm not saying that, 100% I'm correct. I'm just saying that's the foreseeable future, because they made such an aggressive move today. Right? It should put a dent on inflation next month. Okay, if it doesn't, then hey, that means the Fed will have to go to that 1 whole percentage point. They will have to raise it there, or at least have it on the table to talk with the other board members of the Federal Reserve. Did everyone understand that? And the reason why I think that in the next FOMC decision, it's going to stay at 75 BP. Everyone give me a thumbs up. Give me a like on the video, or give me a thumbs up in the chat, or even do both. That'd be great. And guys, if you guys are liking the content and the live streams, make sure you guys are liking the videos and the live streams. It really helps with the algorithm. And if you want to share it with some people that you think are going to benefit from all the information that I give you all, then make sure you guys share as well. But do whatever you guys want. Anything that you guys do will help with the YouTube algorithm on my channel. But obviously, these bots can also sometimes get in as well in the chat, so that's very annoying. Andronic, hey, what's up? Thank you for the thumbs up. Okay, so that's it for tonight, guys. I'm going to sign out for now. I'll see you guys tomorrow at the same time. Okay, remember, OPEX is on Friday. I'm going to expect Friday to be red. Okay, but tomorrow I'm going to expect a nice gap up and a nice green day. Hopefully a continuation. All right, and if you guys just missed all the technical analysis that I've done for SPY, make sure you guys go back to the recording. All right. Okay, guys, thank you all for joining. If you guys want to join the CFO Swing and Watch newsletter, join using the link below. All right, there's a second link in the description box below, and make sure you guys use the discount code 40% off. All right, let me write in the chat here again. Okay, discount code 40MD. Use it. All right, if you guys want to join, this is the time. This is your opportunity to join. All right, I'm going to be ending. The discount code is going to expire by Saturday, so make sure you guys use it. All right. I will make sure to remind everyone again in my Instagram story as well. So if you guys are not in, join by tonight and you will get the beginner's trading guide for free as well. Okay, have a great rest of your night, everyone. Good luck trading tomorrow, and hopefully I will see you all in the CFO Discord tonight.